Seeds of Wisdom RV and Economics Updates Wednesday morning, November 26, 25. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Good morning Dinar recaps. Global finance at a breaking point. Four forces reshaping development funding. New power centers, debt vulnerability, and geopolitical fractures push the system toward redesign. Overview. The global development financing system is undergoing its most significant stress test since the Bretton Woods era. Emerging economies are pushing for greater autonomy, while debt-vulnerable nations face rising instability and reduced access to traditional financing. China's rise as a dominant bilateral lender and shifts in global capital flows are creating a need for new rules, new institutions, and new models of development finance. Key developments. A new middle class of emerging markets, including ASEAN, Latin America, Central Asia, and parts of Africa, is demanding greater voice and more flexible, decentralized financing structures. Low-income and fragile states are falling further behind, facing slowed growth, climate exposure, and shrinking access to IMF, World Bank resources just as needs rise. China's unique lending model and its role as the world's largest bilateral creditor have created tensions with the Paris Club and the G20 Common Framework. Rapid technological change, diverse capital market tools, and complex cross-border linkages highlight the need for modernization of multilateral lending structures. Why it matters. The global development financing system stands at a structural turning point. The post-World War II architecture, stretched by economic shocks, geopolitical rivalries, and new financing actors, is no longer suited to today's multipolar landscape. The next phase of global finance will depend on how effectively institutions adapt to a world where emerging economies demand autonomy. Vulnerable nations require urgent support, and major powers disagree on the rules of engagement. Implications for the global reset. Pillar. Multipolar financing architecture. New development pathways will increasingly rely on regional banks, public-private mechanisms, and diversified capital access, reducing dependence on traditional Western institutions. Pillar. Debt reform and creditor coordination. Without alignment between China, the IMF, the Paris Club, and emerging lenders, global debt restructuring risks fragmentation, with profound implications for markets, trade, and geopolitical stability. Global markets surge as rate cut bets ignite a cross-continent rally. Overview. Global stock markets rallied for a fourth straight session as investors increased bets on a December Federal Reserve rate cut. Bond yields declined sharply, boosting rate-sensitive sectors and supporting a broad-based equity rebound. Risk appetite returned across U.S., European, and Asian markets as investors shifted from recession fears to renewed growth expectations. Key developments. U.S. markets led the advance, with the S&P 500, Dow, and Nasdaq all moving higher as communication services and healthcare outperformed. European equities joined the rally, supported by improved liquidity expectations and strong sector rotation. Canadian index futures climbed, tracking global momentum and easing bond yields. Analysts highlighted that looser global monetary conditions are beginning to take shape, with capital flowing into both growth and defensive sectors simultaneously. Why it matters. A synchronized rally across global markets signals a possible inflection point in the global financial cycle. Rate cut expectations serve as a catalyst for renewed capital flows, easing credit conditions and potentially boosting investment, particularly in emerging economies seeking relief after prolonged tightening. Implications for the global reset. Pillar. Capital flow rebalancing. Lower yields open the door for capital to exit safe haven assets and enter growth markets, shifting liquidity distribution away from the U.S. and toward a multipolar investment landscape. Pillar. Financial market integration. Simultaneous market rallies in the U.S., Europe, and Asia indicate rising interdependence, reinforcing the trend toward globalized asset behavior that shapes future economic alignments. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: dinarrecaps.com